Okay, so traders, what this video is all about is showing you where I'm seeing this market going for the next couple of weeks, or maybe for the very short period of time. That's what this video is for. But let me say one thing before I start this video. I am overall long term. We're talking the next 12 months bearish. Okay. I believe in the next 12 months we're going to be seeing some big moves on the downside. But this here is technically for the very short period of time. Okay, so for the next maybe week or 2 weeks, we might see a direction based on what the analysis tells us. Okay, so but once again, the long term, the next 12 months, I do see a big pullback happening. But for the short term analysis, I'm going off basically what the charts are telling me. Okay, so what we're seeing here with the daily chart is this is the S&P 500. And you only can see one indicator or two indicators right now, and price. There's a reason for that, and I'll show you in just a second. But what we're seeing here right now, we're just seeing simply the price. Okay, there's basically going back from March, April, right here through to where we are right now, which is the 8th of the 10th, or 10th, which is the 11th of the 10th, 2010. And what we're seeing here is this. We're seeing a nice good resistance line through here. Okay, nice good resistance. And the market's really slowly creeping up. Okay, it hasn't really had a big pullback, which is, sort of bothers me as well. And I'll explain in just a minute why. But anyway, the market sort of hit resistance here, sort of went sideways, and now it's creeping right up through here. Okay, now our next resistance or our next point of control, so to speak, is this one right here. Okay. And that's where we're heading right now, that point there. You can see that point there is also a significant point on the weekly chart, and I'll cover that in just a second. So if we look at our daily chart right now, if we break above that, the 1200 level is a significant resistance level as well too. Okay, so what's happening right now is the S&P is really screaming higher. But if I open this chart a bit more, if you ever see a pattern, to me, if you ever see a pattern that looks like this, where the market runs up, and then what happens there, the market starts to do this. Put that there. And let's create a little parallel trend line there. And the market starts to do that. That to me is a bullish looking bearish flag. Okay? That to me says we're likely to get some more downside. Okay? I'm not saying we're going to get some more downside, but that tells me that that's an actual bearish pattern in my analysis book. So that's actually something to be thinking about as well. So we can see that, and one thing that's also interesting as well too is that we're really breaking above these moving averages. So we are breaking above it, but we're slowly breaking above it. Okay, this is not a healthy move in my books. Okay, you got a market run up, then overall sideways, and pop back up, and then overall sideways. That to me is not healthy. A healthy move is this move here. Look at this: run up, pull back, run up, pull back, run up. Okay. That to me is a healthy move. Okay, so that's what I see healthy. Now, if we go over to the weekly chart, you're going to see a lot of things happening here. Okay, weekly chart is showing a lot of different things here. Okay, first thing on the weekly chart is we're going to see like a little head and shoulder formation pattern here. We can see that little shoulder, and the head, and the shoulder, and it's breaking out that now. But look what we're coming to right now. Hitting this red line is the 200 moving average. So we have this resistance here, and we're getting close to that resistance level there. Hit the 200 moving average and rejected down through there. Now the market ran up. Look where it's getting. It's almost getting to the 200 moving average now. Okay, so this is looking again for a bit of a longer term view as well for our analysis and our trading. Okay, but the really interesting thing for this here is this. When I'm doing my sort of bigger term analysis views and see where everything's likely to go, technically as well, I like to bring in some indicators. Okay, the indicators generally, especially on the weekly chart, they generally give you a good point of control, so to speak, of where everything's likely to go. If I squeeze my chart up, you can actually see the indicators much better. Okay, and what I see here on the indicators is this. You can see the first thing is what we see that market get a different color here. There we go. So you'll be able to see that the volume, look at this volume, the volume actually tapered off. Ever since we had this big drop down through here, then the market actually tapered, the volume tapered off. We're getting a bit of a spike here where we are right now, but you can see the volume has been really getting lower and lower and lower and lower and lower. All right. The interesting thing is we're getting now the MACD pointing up, which is a very bullish sign in my point of view. Also, what we're getting right now is, if you notice what happens when the red crosses, when the red crosses above the green, we get a big drop down through there. What happens when the green crosses above the red? This is the DMI. Market runs up through there. We get a little dip through here, okay? But what happens through here? The red crossed above the green. The green is now below. We had sideways below. And now look what's happening right now. They're just touching. Okay, they're just touching. So if you go back and have a look at what's happened in the past, every time we had a green cross, we had an explosion move. Every time we had a green cross here, we had this explosion move here. So what's happening right now? The green and the red are about to cross, and if that's the case, we're likely to see a lot more upside to come. Okay, so that's what I see here on the S&P. But the interesting thing is this: look at this. This is the stochastic, and the stochastic is telling me just be careful up here because something's just not right. Okay, and that's that long-term stochastic is telling me that. So that's what I see there on the weekly chart on the S&P. Let's go to the Dow Jones. Okay, Dow Jones is at a level of resistance right now. You can see on the chart. Okay, I know it's squeezed up, but look at the indicators. This indicator here, the green, has just crossed above, but went down like that. Okay, what we also see is we see this point here being danger. MACD pointing up. But once again, look at this. Every time, ever since we had this big downturn, this is in 2008 to 2009, this big up move, we had a bunch of huge volume through there to explode. But once we had the huge volume, you can see the volume tapering off and tapering off and tapering off and tapering off. And this point through here, there's not much volume going on. Okay, so that's what the Dow Jones is telling me, that, you know what, we're coming to some resistance level here. And I wouldn't be so quite bullish. I wouldn't be so very, very bullish on this because we are coming up to a lot of resistance levels moving on that. And that's the last chart. We're looking at the Nasdaq. The Nasdaq also is coming up against this major resistance point through here as well, which is, if it starts running up, that is a major resistance point. And as you can tell, that if you look back in the past, every time it got to there, nice big resistance point all through there. Hit it, got rejected, and now getting back up to that level there. So we're getting to a resistance level now. The volume is tapered off here on the weekly chart on the Nasdaq as well. We're just slightly, or they're sort of just kissing. They're both pointing down right now. The DMI. So if we do get the DMI pointing up like that, and the red DMI pointing down that's a bullish move. The MACD, if we get the MACD's pointing up, so that's a bullish move. But look what's happening to our stochastic. It's stochastic saying, oh, this is not right. So whenever you see this is telling me that we might get a bit more, just maybe for the next week or two, maybe a bit more time to the high side. But to me, if we fail to break above these levels, then we're going to probably fail at these levels and head straight back down. Okay, and as a good example on the S&P, if we fail at the 200 moving average, if we fail at this level here, if we fail at this 200 moving average through here, if we fail above it, then we're likely to grab back down and scream straight back down. Look at these indicators here. The volume is tapered off, just a little spike through here. So all in all, I do see that we're likely to see a lot more. It's very, very tricky where we are running up, but we're running up to a lot of resistance levels. Some indicators are saying bullish, like MACD, DMI possibly. But one of my main indicators, which I use all the time, is my stochastic, and that's telling me, hey, just be careful here, okay? Because if you know the stochastic, if the stochastic ever gets to these levels through here, it's just simply telling you to be careful, okay? It doesn't mean it's going to stop going up. It's just saying just be careful. All right, guys, that's it for me. Thanks a lot, and I'll speak to you soon.